Coming to you from the heart of Texas, this is Accounting Matters, the go-to podcast for accounting and finance professionals from your friends at Embark. Thanks for joining us, y'all. I'm Nicole Harger, Embark's National Quality Managing Director. And as always, I'm joined by my co-host, the smartest guy in every room that I've ever been in, Adam Olson, Embark's Accounting Advisory Practice Leader. It's hard to believe, Adam, that it's that time of year again, where many of us are not only wrapping up presents for loved ones, but also this fiscal year. But before our listeners put the big red bow on their closed books, I thought there is no time like the present to focus today's discussion on audit preparation and facilitation.
I see what you did there.
Yeah, you like it?
Yes.
Welcome back to the studio.
I know. It's that time. It's December. And we're here. We made it through the year, I guess.
Blink and it's over. Tell you what.
Yeah, I can't believe it's December, end of year. Here we are.
Yep.
So, a lot of people are probably thinking about the holidays, but if you're in the accounting and finance world, you're probably thinking about a lot of other things as well.
And so as companies are beginning to think about closing their books for 2023, they're also probably dreaming of a smooth audit process. But back in your public accounting days, what was the most common thing that kept clients from having an easy audit, as we used to say?
We all love the easy audits. And I would just say, doesn't always mean it's the less complex of an audit, but there's a number of things that can definitely even make the most complex audits a lot more smooth, like you said. And I do think, and it's kind of obvious stuff, right? Like it's clearly like how prepared you really are and trying to limit the number of surprises. So getting ahead of the things you can get ahead of, that you can anticipate, that that your auditors are going to need or be asking about, and to the extent you can have that stuff ready to go, then it helps win. And it's almost inevitable in every audit, right? Something might pop up that was unexpected. It's just kind of part of the process. And, something I know we saw companies, even the best of companies, having to navigate, unexpected things. And so the more time you can create to have capacity to handle those things, because everything else is, a little bit more ducks in a row, everything's kind of organized and aligned, then I do think that just creates a more seamless audit for sure.
Yep. So you kind of hit on the word preparation, or maybe the lack thereof. Let's talk a little bit about why some companies may not be prepared. Like, what are some of the situations that would put companies in a position where here come the auditors and things are not kind of perfectly wrapped up in a nice big red bow?
Yeah, I think a lot of times what we see is just capacity issues, especially of accounting and finance teams. There's a lot of, they have a day job. They got things to do day to day. And the audit is oftentimes just something additional that they're having to take on and deal with. So, it's just availability of those people and maybe even just lack of people. Like maybe if you're a smaller company, particularly, and you have a very lean accounting group, or just, a controller or something who's kind of the point person for everything, it can create a lot of bottlenecks and a lot of pressure on that individual or a small team of individuals.
Yeah, I always remember being pretty amazed, when I was in audit talking with my clients, that they were able to pretty much take on a second full-time job, having to deal with us and all of our questions and how needy we were.
They probably didn't have much of a choice. Or unfortunately is probably the case there. But I mean, it is, it can create a lot of challenges. And, another thing about just people, like if, maybe you've got people on the accounting or finance, maybe it's your first time going through the audit this year, right? Like it's your first annual audit you're going through at the end of the year. And so you may not even know kind of what you need to do to be prepared. And so everything can be a surprise, or if you're not familiar with the audit process or didn't have a background in audit yourself, I do think it's not just capacity, which is, probably going to be, relevant for any audit for accounting teams, but it's also just like awareness of like what you need to be doing.
Yep. And thinking about capacity, or maybe the lack thereof, not having enough hands on deck. Like maybe let's say on a regular basis you do, but maybe you went through a significant transaction in the current year. You're having to rely on third parties as well, typically on significant transactions, whether it's a change of control transaction or something like that, where you do need evaluation done. And so sometimes when the more people you have involved, everyone's kind of got to make sure they're working on the same timeline. And sometimes, it just things take longer because there's so many people involved.
Yeah. And I will also say, even if the significant transactions didn't occur during the year, I've seen scenarios as well. Like you get through the end of the year, but then in Q1 of the following year, when your audit is going on, typically, your business is still conducting business, and maybe there's a transaction or something big that's then pulling that accounting, finance, leadership type team, and maybe there's demands again of outside the audit, outside of just the routine day-to-day accounting for those same group of people. And so there's just a lot of like different catalysts, I think, that can create stress points in the audit process.
Yep. So what about maybe lack of sufficient documentation?
Yeah. So I think tying back to preparedness, I think what we tend, or at least what I remember seeing, is that something would be accounted for. They've recorded it, they've done their thing, but then the analysis or support or how they kind of arrived at their conclusions was what was missing, or what wasn't robust enough. And so it is that lack of sufficient documentation and not having that ready to go for your auditors. I think the more you can, best practice, right, especially if you've got things that are occurring during the year, is to try to like tackle those things as they happen and document those things and get those things taken care of. But I think in reality, especially for a lot of smaller companies or companies with smaller teams, it's tends to what happens is they wait to the end of the year to then go back and start backfilling all that stuff that they should have been doing. So there's a rush to maybe complete accounting memos or policy documentation, or if there's analyses that need to be done or something along those lines that your auditor is going to be asking about. I do see a lot of people scrambling at the end of the year or just right after the end of the year to get a lot of that put together. And sometimes it can be kind of hard to remember like what happened a little bit, especially if it was much earlier in the year, or why certain things were decided, if you haven't really been kind of keeping up with getting that documentation as pretty as you can and as auditable as you can.
Yep. And so kind of on the topic of auditors, right? I think sometimes what came into play too was how well prepared the audit team was as well. Did we have a set team? People leave, right? Do we have all of our PBC lists ready to give to the client? Did the auditors, were they able to perform interim testing to kind of knock out some of that work, to an earlier period versus kind of cramming everything in during, the post year-end audit season? How responsive the auditors are, what are the timelines? Are they setting realistic timelines in order to drive and lead the audit, but also kind of just get everything done? I do think it's really important, which sounds maybe counterintuitive a little bit, but like you need to have a good relationship with your auditors, kind of make sure everybody's collaborating, communicating well, kind of rowing in the same direction towards the same goal.
Yeah, I think it's, there are clients that do manage their auditors better than others. Some of that, especially as it relates to timeline or just kind of making sure things are getting done. But the client then also has to do their part, right? If you're going to have expectations that you want to have, your audit done by a certain timeline, because implications of, missing a deadline can, cause a number of different issues and things that have to be taken into consideration. But you also have to do your part and make sure you've got stuff that's can ensure your auditors can get through things on a timely and efficient manner, you're responsive enough to their questions. You're providing thoughtful information, complete and accurate information. You've got your things organized. And again, it's just that preparedness, that documentation that's necessary to make sure that you're in a position to do that.
Yep. I think another reason why companies may not be prepared is, there could be changes in accounting standards or just very complex technical accounting challenges that maybe, our clients haven't had time to think about, or for one reason or another, right? They haven't been able to spend dedicated time kind of working through those. So that's another area I think that could potentially drive, our clients not being ready.
Yeah. I mean, we just got through the big adoption of obviously revenue a few years ago, right? 842 just kind of wrapped for private companies. And then in 2023, kind of the last, I would say, major kind of new accounting standard with the credit loss standard. Yep. Kind of the final wave of reporting entities for that this year. So definitely those can be other catalysts as well, right? Not necessarily things that are driven specifically by what the business is doing or transactions that they're entering into, but it just has to deal with the standard setters and changes in guidance. I would also say, other things that I see adding pressure to a lot of companies during the audit, especially I would say the last year, maybe in the year, probably since COVID, I guess, now that I think about it. We're so many years from that, but just the uncertainty and just the broader macroeconomic environment. There's a number of factors. We've got rising interest rates and inflation and all these other things that, what historically may have been some routine type things that you might have to provide your auditors. And I'm talking about more like impairment analyses or going concern type assessments and things of that nature that, maybe would have been a little bit more kind of, I'll say boilerplate, or just kind of, you kind of dust off last year's, maybe do a light refresh. I think what we're seeing is just a lot more scrutiny by auditors over kind of higher risk areas like that, just kind of given the current economic environment that we've been in for some time. And I know we're kind of seeing glimmers of maybe turning a corner. It's hard to say. I feel like we say we are, and then we kind of pull back a little bit. But I do think there's just increased scrutiny too that we're seeing from audit firms. And I think audit firms as well are feeling a lot of pressure. There's been a lot of quality findings. We were just at a AICPA conference where we had PCAOB board members just talking about a lot of failures by audit firms and deficiencies, and how audit firms are kind of, there's a spotlight on them right now, but not for a good reason. So I do think quality issues are starting to surface for a lot of audit firms. And so I think what you will see is audit firms putting that rigor and kind of recalibration for their audit teams to basically be like, we need to make sure we're being way more diligent. And so that could lead to a more involved, rigorous, complex, detailed audit than maybe what companies have been used to the last several years. Yep.
Another thing I think about is technology, implementation and integration. So let's say, actually, I have a client that implemented a new billing system or a new financial reporting system, right? And maybe it doesn't necessarily go as planned. And so trying to make sure that our clients are working through and kind of through those challenges and making sure that, data is complete and accurate and, presented, they're going to be able to present reports, for auditors to actually audit.
Yeah. I mean, if you're changing major systems or have made changes to systems during the year, like 2 different types of sets of data to audit, 2 different probably processes and controls around each of those different platforms or, tools or whatever. So just, it's another catalyst there. I will also say what I've seen is maybe creating a little stress as well as if a company changed its auditors during the year. Yeah. Especially maybe if you went from a smaller or more regional audit firm, and I don't want to use the word upgrade, but, maybe for whatever reason you've now are going with a larger national or global audit firm, I think it's not really a surprise, but just the rigor of the audit, kind of going back to that, there's just a different level of kind of expectation for what your auditors might consider reasonable and supportable versus maybe what you're used to. So just being prepared for that, and kind of just going back to your point is like having to build that relationship with that audit team and really kind of understanding their needs and requests and trying to be proactive about, maybe this is kind of what we've historically provided. And if it's not going to be sufficient, or we need to beef up or provide additional context or whatever the case may be, trying to get in front of that as soon as you can.
Yep. And that even goes, not necessarily going from a smaller, more regional firm to maybe a Big Four firm, but even, we saw in Big Four, when you're switching even between Big Four firms, people
just
ask,
different ways of approaches, ways they think of
different
things.
methodology, different approaches.
Sometimes even changing in the audit partner.
Yep. Also even just within the same firm. Yep. And so I guess let's pivot a little bit to talk about why, why is it important for companies to be prepared for an audit?
Yeah, I mean, I think the biggest one is, most companies that are probably getting an audit have to do so for some type of regulatory or compliance reasons. So obviously, if you're a public business entity, then, you've got to file timely with the SEC as a registrant. But then even for private companies, what tends to trigger an audit is typically some type of financing or outside investor relationship where there's a condition of that. You provide, annual audited financial statements as part of certain covenants or agreements or whatever by a certain date. And so, those are probably the biggest reasons, is that you've got a deadline to meet here, and there's expectations also of your audit committee or your board or your executive teams, and then obviously your investors and other stakeholders, that you're going to provide this information and it's going to be available, and they're going to use that information for their decision making, and so there's pressure in that regard to get that done. But then I would also say, in relation to that is, we talked about teams being stressed, and so you've got the compliance piece of why you need to make sure you have a smooth, timely, effective, and efficient audit. But then, kind of an intangible there is your team's pulling double duty here, doing all this work, and they're ready for the audit to be over and kind of get back to their normal routine and their normal day job, and just trying to prevent burnout. So, we've both been on audits that have dragged and have missed deadlines for a number of different reasons, and they're painful and they're stressful, and so I think that really trying to stay as close to that timeline as you can is important.
Yep. And so I think obviously what would come next is what can companies do to get prepared for their audit? Is it too late? It's end of year end, right? Is there still time, I guess, to say?
Yeah, I mean, I think there's always solutions out there for companies to find. So, there's a lot of firms, ourselves included, that provide audit support, and that's, people that will help your existing team on certain aspects of the audit, or maybe if you just need someone to work directly with the auditors and kind of take that entire lift, there's a number of ways that you can bring in outside help to help just facilitate all the demands and requests of the audit and the questions, and having that, it's a big project management exercise, right? Not just for the auditors, but also for the client. Yep. Just between all the information, the requests, the things going back and forth, the issues log, the whatever, there's every audit's a little bit different, but there's a lot to manage there. And so if you're already seeing the writing on the wall, you've got to get this audit done, you've got a deadline, you don't think, you going to your board or whoever to ask for an extension of the audit because you're going to have to go back to your lenders and talk to them about getting a waiver for maybe a debt covenant because you're not going to meet the audit timeline. If you already see that happening because you're missing the resources or there's just too much going on this year, you definitely need to be thinking about outside help to help prevent some of that. I mean, there's obviously an upfront cost to that, but I think the alternative is probably a lot more problematic.
Yep. Yeah. And so I know that we don't typically talk about Embark services that, our firm provides on this podcast, but audit facilitation is obviously, I think you mentioned, is something that we can do. And it's not just from a PMO perspective, right? We can prepare PBCs, but in addition to that, it's writing technical memos, it's drafting financial statements and disclosures, serving, you talked about serving as PMO, kind of that first point of contact for the auditors. We hire from Big Four, so we have all been there. We know what auditors are looking for. And so that is where we have found success in kind of helping our clients have smoother audits and kind of meet their deadlines and get through
definitely one of our
through that process.
Probably most popular services definitely this time of year is that audit facilitation support, which it's a very broad kind of term, and it can like I said involve a lot of different things, just very pointed things where we tend to assist or really taking the entire audit process off the accounting and finance or management's hands as much as we can, and really running with it independently with the auditors and helping just again the goal, timely audit with as few issues or at least resolution to those issues as quickly as possible, so that everyone can get that audit opinion and kind of move on.
Yep. All right, well, I think that wraps us up for today's episode. If you are one of our listeners and find yourself thinking you may be one of these people that aren't quite prepared for their audits, don't hesitate to reach out to us, on our firm's website or our Adam and I's LinkedIn profile. So we'd be happy to connect.
Yeah, don't come out of the holidays high with the audit low. So definitely want to help you guys out and enjoyed the conversation.
Thanks for tuning in to another episode of Accounting Matters.